Welcome back to Explain the Charts. Today, May 12th, 2025, we're dissecting GBPUSD, looking at both recent news and the charts. Recent news indicates a US-China trade truce is boosting the US dollar, causing GBPUSD to crash. The US has agreed to reduce tariffs on Chinese goods, and China will reciprocate, a deal effective May 14th. Bank of England officials are cautiously optimistic about inflation moving in the right direction, but await further evidence of a slowdown. Let's move to the chart, starting with the one-day view, to analyze this situation further. We will be analyzing the technicals and how they line up with this news. We'll look for support and resistance, key price levels, and potential trading opportunities. On the daily chart, we see a recent period of consolidation followed by a significant upward move and now a downward turn. It seems there's a notable support level around 1.2500, a level where the price has bounced previously. The price failed to stay above 1.3400 as predicted by forecasts and recently crashed on US-China trade truce boosting US dollar. Now, let's switch to the 1-hour chart for a closer look at recent price action. We can see more clearly the recent drop, and it looks to be approaching a support level. A break below the support could signal further downside potential, perhaps down to the 1.3080 level mentioned in news reports as the 50-day SMA. Zooming into the 15-minute chart, the very short-term downtrend becomes clear. We can see how the price struggled to hold above 1.3300 and is currently around 1.3258. If this level fails to hold, the next support could be around 1.3211. Looking at all of this, we need to keep in mind that US CPI data and UK employment data are coming out soon, which can cause a lot of volatility. To recap, key price levels to watch are support at 1.2500 on the daily, 1.3080 and 1.3211, the first two being longer term and the latter being short term. If the support at 1.3211 fails to hold, the likelihood of further downside increases significantly and testing 1.3080 becomes very possible. If the upcoming economic data from the US and UK are weaker than expected, this would reinforce the likelihood of a continued downtrend. If the dollar weakens against GBP for some reason, we might see a bounce back towards the 1.3300 level or higher, but that is unlikely unless a significant event changes sentiment. So, keep an eye on these levels and be ready to react to the market's movements. Stay tuned to Explain the Charts for more updates. Remember to factor in the news events and economic data releases for a fuller picture.